Hey everyone, Mark Santoyo with the Santoyo Group at RE/MAX Loyalty, and today I have a very special guest.
I'm Silver Castillo, agent with Country Financial.
Silver.
As always, good to see you.
Very good buddy of mine. Thank you for coming in and chatting with us. Hey, Silver, there's a lot of people that just don't know. What does typical hazard insurance cover?
What it usually covers, it depends what kind of policy you have, but the main factor on the policy is the dwelling coverage. The limit on there is what the insurance company is going to pay out to, in most cases, replace your home. That's what you're paying for. You want to have enough coverage to, God forbid something happened, there's a total loss, you have enough limit to reconstruct your home.
Has it ever happened where the cost to rebuild your home is greater than what your coverage was? I don't know.
Yeah.
No way.
That can happen. So you can manipulate your policy. You can have 100% replacement costs, which is what we normally recommend.
Okay.
But you're not forced to have that. You can have less coverage. You can go down to 90, 70, 50%, whatever makes you more comfortable. There's people with brick homes who say, hey, I'm not going to replace the brick. It's not going to burn, so I can have less coverage, but you're really rolling the dice on that. So to answer your question, yes, you can have less. We recommend you to have more.
Right. So, hey, if my mortgage company says you need to have at least $500,000 coverage because that's what you owe us, and my replacement cost is really $800,000, but I only insure for $500,000. I can do that, right? I can insure for whatever.
If you're comfortable with it, if the lender's comfortable with that, yes.
It's probably not the smartest decision.
Exactly.
Though, right?
As an agent, I'm going to advise you this is a risk you're taking. So if the replacement cost is $800,000, I'm going to explain to you why. We're going to add all the factors of the property, the square footage, the type of construction, and that's what's going to give you your limit. So if you want to take less, that's totally on you.
What I'm hearing is you're trying to upsell me on something. Is that what it is? I mean, you want to be able to replace your house,
not at all. You know, I want to sleep at night, so my job is to tell you, give you information, you decide what you want to do with it, and that's the way it goes.
Love it. Great. Yeah. What if I have like a log cabin? You know, can I insure that? Like, you know, it's a small little shed maybe.
Well, is this in your backyard or is this?
What if I sleep in a shed? Not that I do, maybe I should. My wife sometimes throws me out and I do sleep in the shed.
So it is in your backyard.
Yeah, all right.
It is in your backyard. So yeah, we can insure the shed. And part of your policy is you insure the shed, the garage, fence, all that stuff is included.
Hey Silver, it's a beautiful day out, man. You want to go for a little walk and continue our chat?
Let's go.
One of the questions that comes up whenever we're talking to clients is, what's some of the stuff that you should consider when you're shopping for insurance?
You want to be aware what your dwelling coverage is going to be. You know, are you at 100% replacement cost? Are you not? You got to be okay with that. But besides that, there's other factors like your deductible. I've seen times where they squeeze in a higher deductible and the client's unaware of it. So dwelling coverage, deductible, and there's a whole bunch of other coverages on, such as personal property, medical costs. You own a property now, so if someone gets hurt there, you want to make sure you have enough limit on that, and then the liability coverage protects you from lawsuits.
Hey, one of the questions that comes up a lot is, are there any add-ons that you should consider, or how do you call them?
Endorsements? You're talking about endorsements?
There you go, yeah.
Yeah, so your policy has certain perils that covers during a loss, but you can add, well, before I talk about endorsements, something that can be adjusted on your policy is scheduled personal property. So on your policy, you're going to have a certain limit that's going to cover everything. But if you have anything of high value, such as jewelry, an engagement ring, a wedding ring, fur coats, guns, I don't know.
Anyway, yeah, maybe.
You want to schedule it. You know, if it's stolen, for example.
My son has a saxophone.
Okay, yeah.
That be something?
Depending what the value is, you know. Okay. So you are going to be charged a separate, not separate, but it does change the premium. It's a fraction of whatever that value is. And then besides that, water backup.
Oh, good one.
Water
yes.
backup. So that's never part of your policy. It's an endorsement that you need to add on.
Ah, good to know. So it's not covered under your typical policy.
No.
You have to add that on.
Yeah. Okay. So if you're in a property that is, you know, it water backs up, if the sewer system backs up, that's something that you want to be safe with.
Got it. Good stuff, man. How is the homeowner insurance calculated?
Calculated premium.
Yeah, how's the premium calculated?
So if you're talking about how home office comes up with the premium, I mean, you got to talk to an actuary about that one.
What? All right, you're using some complicated
so those
words. I mean, let's just call it the
actuaries.
The premium wizard.
There's a lot to it, but what my office knows, or what we handle, is what determines the price on a policy is obviously how much you're insuring your property for, deductible, zip code, wherever that property is at, that's a factor, and your insurance score. Okay. So I know lenders use a credit report, a credit score. We use an insurance score. So depending on what your insurance score is, zip code, how much you're insuring your house for, what the deductible is, and claims history. So if you're trying to insure a new house and you submitted a couple claims within the past 5 years, that can even make you ineligible.
Good. All right. So your appearances have nothing to do with it, because I'm bald. I'm not going to get charged more money.
That's why you pay a very cheap rate, I'm sure. They got you.
But hey, what is flood insurance for those that don't know?
Flood insurance. So earlier I mentioned water backup, right?
Right.
And some people confuse both. So water backup is when there's too much rain and the sewage system starts to back up.
Okay.
That it returns to the inside. Flood insurance is determined by FEMA. FEMA has a flood map that any house in that area is going to need flood insurance. How do they come up with that map? Usually it's homes near the lake, near a river. When it rains, that river starts to overflow, you can say. And for example, in this house here, if the water starts to come up here, it's going to start going in through the window, through the foundation, through siding, whatever one of those. But
so it's not coming up through the sewer. It's like
it's from the outside,
lake or river or something like that.
And that's a separate policy too.
Okay.
Flood insurance is totally separate from your actual homeowner's policy.
But it's pretty inexpensive, right?
It depends. It depends how much coverage you need.
Right.
Same thing. Coverage, deductible, all that stuff comes into play. But to answer your question, you're paying a separate premium from your homeowner premium as well.
Got it. Yeah, it was a little joke. I know it could get pretty pricey with that. Hey, here's a little bit of a curveball for you. What happens if one of my contractors falls off my roof? Am I liable for that, or does the insurance cover it?
Now that's a claims question. That's a claims question. All I can really say on that, it's a case-by-case scenario.
Okay.
I tell my clients all the time, if you're gonna hire a contractor to do any work in your property, you gotta make sure they're insured. They got their general liability, their workers' comp. You gotta make sure they're insured and make sure your policy's in place. Something happens like that, claims department's gonna figure that out, which policy pays what, so.
Got it. But definitely it's something that could protect me.
Could. I mean, it's a case-by-case scenario. If that guy jumped off or he slid off, I mean, there's so many factors that go into how he fell off that's how it's determined which policy pays out.
What if he's trying to overcharge me and I kind of pushed him a little bit?
I mean, don't turn your mic off.
Everything's so darn expensive right now. Let me ask you this. Have homeowner insurance prices been affected by inflation?
I really appreciate that question. That's a real good question. I mean, it's no secret. You could go on Google and search different insurance companies, how they've adjusted their prices. To answer your question, yeah. So when you pay insurance, you're paying for a promise. You're paying for the promise that the insurance company is going to pay the loss that you had, right? And if the cost of living is going up, if medical costs is going up, the price of construction is going up, that's everything that you're paying for, right?
Makes sense.
If you're sued, I don't think attorneys are dropping their price, right?
No, those attorneys make a lot of money.
So yeah, inflation affects insurance.
Got it.
Insurance has to, and then the insurance company needs to make sure they have enough money to pay these losses, so that's where the adjustments come in.
Inflation is affecting these prices. Is there anything that we as consumers could do to keep our homeowner insurance policy prices down?
Yeah, I would have to say that the misconception that some people have is that they believe that insurance is a maintenance policy. Okay, as a homeowner, you buy your property and you have to keep up with your property as well, right? So the more claims that are submitted, the more the company has to adjust to keep up with that demand, right?
Right.
So as a whole, and I know the public doesn't like to hear this. They're like, I'm paying for the insurance to cover my damages, but you know, insurance was really meant to cover catastrophic events. If your house burned down and we paid out 200, 300, $500,000, and your insurance goes up $200 a month, I don't think there's a big deal on that, right? But if you submit, but if you submit a $500 claim, you know, and everyone does, and your insurance costs $500 a year, then you know that's where it gets a fuzzy.
Yeah, that makes sense. That makes sense. My wife's been telling me to paint my fence for longest, and you know what I tell her? I'm insured. Silver, thanks again for joining us. It has been a great conversation. I really appreciate it. If you guys are looking for a really good insurance agent, I totally recommend my good friend Silver.
Silver Castillo, Country Financial.
Thank you guys so much for joining us, and we'll see you at the next Market Chat. How about a little snack?
I worked up an appetite with that walking.
You and me both.
I didn't bring my wallet, man.
Oh, I got it, bro. I got it. It's on me.
It's in my car.
Oh, you're that guy.
He's that guy.